في مقابلة مع الشرق وعلى هامش ملتقى الاستثمار بحر، قال نوريال روبيني مع The Family Office أنه تراجع الدولار عزز من تنافسية الاقتصاد الأمريكي والدول المرتبطة عملاتها بالدولار مثل السعودية ودول الخليج، مستبعدا وجود بديل حقيقي للدولار كعملة احتياط عالمية. توقع روبيني في حديثه معي أن يواصل الذهب الأداء الجيد في ظل تصاعد المخاطر الجيوسياسية والديون، في حين وصف العملات المشفرة بأنها أصول استثمارية أو أصول مضاربية عالية التقلب لا تمثل تحوطا حقيقيا.
Well, in the short run, maybe the dollar can weaken a little bit more, but there's not been a free fall. On a trade-weighted basis, has fallen by 10%. That 10% improves the competitiveness of the United States, improves even the competitiveness of countries like Saudi Arabia and us in the Gulf that are pegged to the US dollar. So tourism here is going to be cheaper because you're pegged to the US dollar and dollar is 10% cheaper, so that benefits. The inflation impacts are modest because it's a gradual fall of the dollar. And the idea that the dollar is going to be replaced as the global reserve currency, I think, is far-fetched because Europe is weak, Japan is weak, China has its own challenges of rule of law, capital controls, limited exchange rate flexibility, lack of deep capital market, current account surplus. So people may not like the dollar, but honestly there is not a good alternative. And if American exceptionalism remains because U.S. economy is strong and the stock market is going to do well, then the investment boom in the U.S. is going to be financed by capital inflows into the stock market, investing into the industries of the future, and the dollar over the medium term, rather than weakening, is going to become stronger, because if U.S. growth is going to be 4%, while in Europe is only 1%, the dollar has to become stronger relative to the euro. So in the short run, you could see gradual dollar weakness, but over the medium term, we have American exceptionalism and exorbitant privilege of the US dollar remaining. The dollar is going to remain strong. Therefore, those who are pegged to the dollar are going to do well.
I hope so, because we're pegged to the dollar. My next question, I heard you say inside that Bitcoin is a fad. You're not a believer in cryptocurrency?
No, if you think about it, last year you had the most pro-crypto administration in US history. He passed the Genius Act. He made investment himself in crypto, and everybody said crypto and Bitcoin is going to go to the moon from 100,000 to 200, 300, 400, 500,000. Guess what? And they said it's the new digital gold. Last year gold went up by 60%, while Bitcoin fell by 8%. And since the peak of October, gold has gone up by another 30%, while Bitcoin has gone down by 30% from the peak. So it's not a digital gold. When there is a geopolitical risk, when there is a risk off, when there is worries about debt, deficit, and inflation, gold goes higher, Bitcoin and crypto go lower. So they are not a hedge against tail risk. They are very highly volatile and speculative, maybe store of value. But they're not, by the way, currency, because they're not a unit of account, they're not a means of payment, they're not a stable store of value, they're not a single numerator. So calling Bitcoin or cryptocurrency is a misnomer, because anybody who knows anything about currency and money knows that they're not money and they'll never be money. So I would say there are lots of things you can invest. You can invest into technology, you can invest into oil, energy, raw material, you can invest in food, you can invest in gold, but crypto is something that doesn't have any fundamental value. You cannot eat crypto, you cannot use it as energy. It doesn't give you income, doesn't give you dividends, doesn't give you any type of return. It's just a speculative bubble. So stay away from it. There's plenty of great assets in this region of the world and globally you can invest if you want to invest it.
What do you see, or how do you foresee the gold reacting in 2026? Do you still think people will keep investing in gold, will keep compiling gold, or they might be a step back and volatility like we heard today?
Well, I think that the gold is going to continue to do well, because we're still in a world in which there are lots of deficits and debt, and people are worried about eventually debasement of fiat currency, that these debts are going to be wiped out either through inflation or through default. We're also in a world in which, whether we like it or not, there are geopolitical risks, and whether one day is worries about Venezuela, the next day about Greenland, the next day about Iran and US and Israel, the next day about US-China. Whenever there is some risk-off episode because of geopolitics, people want a safe asset. They go into gold. And those periods of time, by the way, Bitcoin goes down while gold is going up. So you have economic risk, you have debt risk, you have debasement risk, you have inflation risk, you have geopolitical risk, and the other risk is that the rivals of the U.S. are worried that the U.S. may be weaponizing the dollar and seize their dollar assets. So which is the only reserve asset that cannot be seized by the U.S., like it happened in Russia, Ukraine, where the foreign reserves of the Central Bank of Russia, not just in dollar, euro, yen, pound, whatever, were seized, is physical gold. So whether you are a rival of the U.S. or even if you are a frenemy of the U.S., you're worried about secondary sanctions. Say Brazil that says if there's a spat between U.S. and China, they could become collateral damage because of a secondary sanction. Also the Brazilians would like to have more gold, or the Turks, or the Indians, and so on. So I think being overweight in gold, even this year, is still something to do. You want to be somehow overweight in gold. Gold gradually, with some volatility, is going to continue to go higher because we live in a world of lots of uncertainty and risks.
So uncertainty is driving gold one way or another. In your opinion, to wrap up, what is the biggest opportunity you see ahead?
Well, the biggest opportunity I see is in the technology of the future. Some of it can be, how to say, investable even by the average person, because if you invest into the Mach 7 or the hyperscalers that are publicly traded company, maybe not all of them are going to do well. Out of the 7, maybe 3 or 4 are going to do well, but the upside to those well is going to be huge, while the downside to those who are relatively weaker is going to be limited. So if you're exposed through publicly traded companies that are in tech, in my view, in the U.S. more than China, because China has a lot of rule of law and other political risk, you're going to do well. And if you are a sophisticated investor that can invest into the startups of the future, whether it's in AI, defense tech, quantum, fusion energy, space exploration, and so on, you're also going to have even higher return. Not everybody has access to the pre-IPO firms, but if you don't have access, you can get exposure by having exposure to the big tech companies of the present. And most of them tend to be in the United